Assalamu alaikum. My name is Minhaj Alabadin. My student ID is 2211037114. Today I will discuss about Bangladesh Bank monetary policy. Now, monetary policy is the process by which a country's central bank. In Bangladesh, this is the Bangladesh Bank controls the monetary supply, interest rates, and credit condition to achieve specific economic objectives. Now, Bangladesh Bank latest monetary policy statement for January to June 2025, which continues a contractionary stance aimed at controlling inflation and stabilizing the economy. Released on February 10, 2025, this policy reflects key adjustment in interest rates, credit growth, and governance reform. Let's take a closer look at the highlights. Then I explain key highlights of the policy. Policy rate. Repo rate 10%. Standing lending facility SLF 11.5%. Standing deposit facility SDF 8.5%. These are maintained within a 150 basis point interest rate corridor. Inflation target raised from 60.5% to 7 to 8%, recognizing ongoing inflation challenges. As of January 2025, inflation stood at 9.94%. Credit growth. Private sector target remains at 9.8%. Government sector increased from 14.2% to 17.5%, indicating greater public borrowing needs. Now, I will explain the exchange rate and framework reforms. Crawling peg exchange rate system introduced in May 2024, the Taka is now linked to a currency basket based on the real effective exchange rate REER. This aims to reduce volatility and close the gap between formal and informal currency markets. Then monetary policy framework. Shift from a monetary targeting to an interest rate targeting framework. Weekly repo auctions replace daily operations for better market engagement. And then banking sector reforms. These are governance reform, prompt corrective actions. Now, governance reforms. Stricter qualifications for bank directors and CEO, Chief Executive Officer. Now, rules for appointment or reappointment of MD, Managing Director, and Chief Executive Officer of CEO. Focused on improving transparency and leadership accountability. Prompt Corrective Action (PCA), effective March 31, 2025, enables early detection and resolution of financial stress in banks. These steps are aimed at ensuring financial system resilience and trust. Then, significant change from previous policy. Inflation target revised upward from 65% to 7 to 8%. Then number 2, government credit growth increased by over 3% points. Number 3, exchange rate regime changed to crawling peg, an important structural reform. Number 4, framework shift to interest rate targeting enhance policy transmission. And number 5, governance overhaul with new banking rules and PCA framework. Together, these changes signal a more modern, disciplined, and proactive central banking approach. And I will describe the policy reform suggestions. To strengthen his progress, further reforms are recommended. These are unity exchange rates, remove lending rate caps, strengthen Bangladesh Bank's autonomy, enhance supervision, improve coordination. Unify exchange rates fully for efficiency and transparency. Remove lending rate caps to allow market-driven credit pricing. Strengthen Bangladesh Bank's autonomy and policy-making capability. Enhance supervision to reduce non-performing loans. Improve coordination between monetary and fiscal policies. These measures would help make monetary policy more effective in addressing inflation and supporting stable growth. Now, I will describe about the whole of the summary in my presentation. Bangladesh Bank's monetary policy for early 2025 continues a tight stance in response to high inflation and currency instability. The introduction of the crawling peg, shift to interest rate targeting, and reforms in banking governance reflects a strategic shift toward modern central banking. However, long-term success depends on stronger transmission mechanisms, deeper financial markets, and institutional independence.